Boom. We are live, ladies and gentlemen. Thank you for joining us today. This is Tio and the Arcane Bear. It's great to see everyone. Lots of exciting things taking place. Try to always keep a calm, cool, collected approach to all of our investment thesis. We're going to be starting off with Bitcoin, moving over to Avalanche, and taking a look at Ethereum. I think just for kind of an overall of a market digester, I think it'll kind of help suss things out a bit. So right from the get-go, boom, the crypto fear and greed index over the last 3 months. Again, the important thing to remember here is that in general, when the market is around this 10 to 30 range in the fear, it's usually a pretty good area to accumulate. And what we're trying to do is build our thesis that what we're witnessing again is the last point of supply, or also known as an LPS in the Wyckoff accumulation ranges. So seeing this nice bottoming of the fear index right now, I think is really positive. Yesterday we had a bunch of supply come in to the market, and the price actually went positive on that. Not a normal sign. This could be noise in the aggregated data itself. I was reading some conversations in the Twitter sphere about the potentiality of Glassnode not recognizing all of the data due to some of the cold storage or hot wallets that had been moved around in the recent month. So we do see a big chunk of supply coming back onto the market, yet price has been going up. So usually volatility, and especially at this late stage in the market, when you have supply come in, usually don't see a price increase. So this could actually just be noise in the data aggregation process. Some of you had asked that on Twitter as well. So I think that when we see stuff like this, we recognize, okay, the lack of Bitcoin on the open exchanges is going to create volatility. And here, this general decrease that if we take a longer kind of macro view here, this really high spike in supply in the market coincided perfectly with the day that we started the pandemic effectively. So you can see the inverse nature of the supply and the price at that particular moment. Now, they're not directly correlated, but the volatility aspect is directly correlated. And since that moment, every day since that moment, we have gone down in supply quite significantly. Now, again, you can see the almost inverse relationship of price to supply in the market. Here, back in April, as we started to see more and more supply come into the market, it created a drastic price drop. And as soon as that supply started to disappear, the market price started to go up. So again, it's not a direct correlation, but it's pretty close. And the reason being is because as you remove the Bitcoin from the exchanges, the likelihood of that volatility goes up dramatically. So very positive nature so far, which brings us to our next part of this thesis, which is the LPS potential. So we're going to take a look at Bitcoin here. This is the 6-hour chart, currently on an area chart. Instead, we'll put the candles there. I'm sure everyone's more used to seeing candles. I believe we're in a larger accumulation area, and that this is the final LPS before we go much higher. Now, there's a few other indicators as to why I believe that, but let's just look at Bitcoin for the moment, both the fear index and the on-chain fundamentals of what we've been looking at. So this LPS region here, these last points of supply, which is what LPS stands for, we're looking for these aligning indicators, okay? Here's a reduction still in the supply. We're at generally the lowest point of fear that we've seen. I mean, even if you look at all the data for the crypto and fear index, back here, this is the lowest it had been in March 11th since December, when we hit around $3,500 Bitcoin. And then here you can see the $3,500 Bitcoin move up to the $13,000 and then come back down to the $7,000, then up to the $12,000 and then down to $3,000. So every time we've landed in an area of fear around 10 to 30, this is a good area to accumulate. So we stand by our thesis that this is an LPS and that this is a good area to accumulate. Now, the open supply coming onto the market, which is a little, I'm going to chalk it up to noise, that this is probably a data aggregation on Glassnode side, that where we saw such a huge release and then a massive chunk back up and very little change in the price, that what I'm assuming we witnessed here was not an actual change in the supply in the open market, but just the way Glassnode aggregates the data. If anyone has any further insight in that, you're welcome to drop it in the chat down below and let me know your thoughts. But nonetheless, being that I believe this is the LPS, if we get rid of our drawing here, actually we'll use just the top part for now. So if we scroll in, This is where a lot of people are going to be talking about is this accumulation range, that what I believe accumulation range are in is not guaranteed. So generally, this area that we're in right now, we need to start to close well above, let's say, $50,000. If we close above $50,000, Bitcoin is going to continue, and then the rest of the bull market is going to continue. And this is where we start to aggregate more of our own data around where we are in the market. If we take a look at Ethereum was in a very strong reaccumulation after decline pattern. So this is a well-known accumulation pattern. We use it frequently within a lot of the kind of Wyckoff textbook stuff we do in our private group. And here we see the first SOS, which was here, and the second LPS and SOS followed very shortly after. So these are actually largely bullish indicators that we see in Ethereum here too. We are holding right now above the previous all-time high, at least within the wick and the range. If we go to the area chart, we'll actually see a clearer version of this. But here again, you can see that we're starting to hold right around the previous high of this trading range. So these reaccumulation after declines are weak. I'm not super bullish on Ethereum. I'm way more bullish on Avalanche. I sold I know for those of you that have been following, we're way heavier in Avalanche than we are Ethereum. It's been that way for quite some time now. It's just better technology. But all we're trying to do right now is suss out where we are in the market cycle itself. So I believe that what we're witnessing here is a secondary LPS for Ethereum as well. It lines up very, very closely and succinctly with the previous all-time high. And then what we're witnessing in Bitcoin right now is weak market hands. So let's take a look at the market from a psychological perspective. And to do that, what we generally want to do is take a more macro view of the market that we are in. So we've been following this bull market for multiple years now. And one of the most important parts is to first off, zoom out and remember where you are. So this is how we got here. So if you go back and you look at all the YouTube videos I was doing between, let's say, August 2020, not only were we really bullish on Avalanche when it was around $1 to $10, we were really bullish on Bitcoin. And the reason being is because of this large two accumulation channels that were taking place, both of which were strong indicators that we are going to continue higher. This primary trading range here, which is what gave us this really nice breakout pattern and why we were so bullish on both Bitcoin and Ethereum at this time. But it's important to remember that when we're this high up, there's not a whole lot of room for the market to grow. This is what's known as the middle of the market. And this is where most retail investors get sucked in. And this is where there's pretty much equal room for downside as there is upside. Bitcoin could easily come back down to $20,000, although I don't think it's going to do that. It would test the previous top of the trading range. There's nothing wrong with that. But seeing as we held this previous green regression line, this one I'm moving on the screen here, I'm still largely bullish. Now, I think this is going to come back down and swoop up to the $90,000 to $120,000 range, and then it's likely over for quite some time. And the same story is playing out in Ethereum. We see our bullish reaccumulation after decline for what is probably our fourth wave, starting with the fifth wave. Since early 2020, we figured Ethereum could easily go to $8,000 based off some nice Fibonacci's we had laid out in our earlier videos. I still stand by that sentiment. I don't think anything has changed within the market. And then we look at Avalanche. Now, we've been very bullish on Avalanche for quite some time. The first trading range that we shared on Avalanche was around $3.50 to or $1 to $3 effectively. So this initial trading range that we drew way back here in the green, and then warned about Avalanche being in a reaccumulation pattern, even though it was up at $11, it had already 10x'd. We were still quite bullish on it at that moment. So this time that it took to get here is important to remember because A, we're already really high up, but B, we're showing the market strength in its finality. To go from $3 to $117 is a significant amount of buying pressure, and you shouldn't underestimate that. Shouldn't underestimate the fact that we've been here for quite some time in this bull market, so that there's a fair amount of risk on the table. But what Avalanche is doing here, for those of you that follow the channel, these Livermore patterns can be very explosive. We respected the bottom of this Livermore regression channel very, very powerfully so far. We bounced right off of it. And look at the supply, the interest here. There's a massive amount of interest in Avalanche. So I've said this countless times. Avalanche is better tech than Ethereum. What Ethereum wants to be, Avalanche is already doing. They already have the built-in burning mechanisms, although Ethereum didn't have that at the time. They already have the proof of stake mechanism. It's already, it stopped creating new liquidity, so we know where the limited amount of supply is. And the fact that if you're burning, it's already deflationary. Even if it's stagnant and people lose wallets, technically that's deflationary too. So Avalanche has a lot of really strong indicators that leads us to believe that this is where one would want to be invested. I don't take advice from someone on YouTube necessarily, right? But we've been invested into this particular asset for quite some time, and I recently heavied those positions. So why? Well, it's just better technology. So because we see what I believe is a strong reaccumulation cylinder, Jesse Livermore cylinder here, you can look that up. And we see a strong likelihood of an LPS, a final LPS here, holding previous highs for Ethereum. Bitcoin here actually looks just as strong. But again, remembering that the RR, or our risk to reward relationship here, is skewed. We're in the middle of the market. It's nowhere near as powerful as where we were when Bitcoin is at $7,000, or when Ethereum is at $300, when we started going bull market, up, basically only up. They're going to continue to print capital. So our investment in this sector, Bitcoin went public this year. Ethereum is still venture capital. It could totally fail. It could just be the CryptoPunk chain of the future. Maybe that's all it does. I'm not sure. I can't tell the future, but things like Avalanche, Solana are very well positioned to take over a lot of DeFi and Web3. So in early venture capital, you should understand that the likelihood of failure is quite high still. Whereas Bitcoin basically went public this year. This is like Bitcoin's public offering was this year. I see one of you guys are asking about 1inch. 1inch did around 150% off of the trading range that we showed. We took profits within our private group. A lot of people did really, really well on that play. And we moved on to a next thing. That was more of an open dynamic sharing of 1inch. I don't know how well the aggregator space is going to do. It's still too early. And I'm a bigger fan of Avalanche. So things like Trader Joe, Banky, the whole DeFi sector on Avalanche is actually much more interesting to me. So we pivoted and went over there. But yes, if in the private group, we sold around 120% profit on that one. It was a patience game though. Wow. What a patience game. We'll leave it at that for today. Just a quick little episode and update. Thank you guys all for joining us. Oh, actually, there is one more super important thing I do want to share. I want to share this with you guys. So, first off, if you don't, follow us on Twitter. But I'm a huge fan of the venture capital sector, and I'm a huge fan of the play to earn sector. If you've watched a bunch of my videos, you'll know why, but I believe this is where we get a lot of the adoption from the people that would not normally be adopting the crypto sector. NFTs have done this as well. They've brought a lot of people that are not normally interested in crypto into the crypto sector to understand why is this technology so valuable for these particular types of ideas. So Decimated is launching their whitelist today. On firestarter.fi. So if you want to participate, follow both Firestarter and Decimated in their Discord channels to go through the process of what it's like to participate in their launch. But those guys are always the best. Decimated is going to be the best to help you through that process. So be sure to follow Decimated in their Discord channels as well. Really great game, great team. If you can watch our podcast that we do with Stephen Arnold as well, super switched on guy. And that's always what we're looking for, founders that can carry this across the line. You know, a good investment today will be a good investment 5 years from now. So how do we pick out at such an early stage which one of those are going to be successful over the long term? And that's what we try to do, is try to really share the market dynamic, not just of the people that are investing, but of the long-term thematic vision that's taking place here. So if you haven't yet, check out Decimated and then follow us on Twitter for that. We constantly leave a little breadcrumbs and updates there. And if you haven't, join our private group. I'm not going to convince you why you should, but here you can see we keep a nice tabs on everything that we're going over at the moment. So there's a lot of really cool stuff that we're excited about. Illumia, Avocado Guild, Solus, and Rainmaker Games are all on the top of our list for where we're investing right now. And then again, just our simple strategy of good assets like Avalanche, Ethereum, Bitcoin, Solana, just keep buying. And then venture capital, heads I win, tails I only lose a little. It makes it a really, really easy sentiment to play. Anyways, this is Tio with the Arcane Bear. Thank you guys all for joining us today. I hope you had a good time. Just a brief little update, and we'll see you again on the next episodes. Yeah, boom. Wait, hold on. I got an intro video y'all will like, right?